Tēnā rā tātou katoa, or welcome everyone and good morning. My name is Melissa Frick and I'm one of your business training managers here at ANZ, and it's my great pleasure to welcome you along to our commercial property sustainability edition here this morning. We'll just go through some housekeeping and some fine print with you as we go. So just some fine print here for this morning. I won't go through in detail, but we have some great speakers to go through some information here with you, but it is in no way in form and in place of any personalized advice for yourself or your business. At this point, I'm going to add welcome Alan Hoodless, our Head of Property Finance here at ANZ.
Thanks very much, Mel. Morning, everybody. My name's Alan Hoodless. I run the property finance team at ANZ. It's my pleasure to introduce our speakers this morning. So without further ado, we're going to start off with Steve Dixon, who's an ESG specialist here at ANZ. Have Brad Crowley, who is a senior manager at the New Zealand Green Building Council. And then finally, we'll have Su-Fern Tan, who's head of ESG for CBRE in the Pacific region. But first of all, I'm going to hand back to Mel, who's just going to run through a slide with some facts and figures on ESG at ANZ.
Thank you, Alan, and wonderful range of speakers that we do have for you this morning. Now, we've got this wonderful slide here up about ESG at ANZ, and I thought talking about sustainability, it's great to share what we've been doing here at ANZ. So on the slide here is some 2021 ESG highlights, and some really big one that we're working on around is sustainable finance, and Steve Dixon, my colleague, will talk a little bit more about some stuff that we're doing here. But we've done 14 sustainable finance deals with over $5 billion towards the green economy. We look at our supply chain engage with over 100 suppliers on sustainability. And we have a great housing opportunity. So we've put 100 million for affordable housing and supported over 1,065 households into healthier homes. We have a range of partnerships with sustainable partners like Sustainable Coastlines, Toy2, and a range there across the board in helping us be more sustainable. Under our financial and wellbeing and community, we've done over 1.2 million donated to New Zealand charities through our ANZ Staff Foundation. So if staff can donate, and the bank match dollar for dollar. So it's a great way to give back to the community. And as you can see, there's a lot more that we've contributed as well. If you'd like to know more, that's on our website, Banking with ANZ Environmental Sustainability. Now, I'd like to hand over to Steve Dixon, our ESG specialist here at ANZ.
Thank you, Mel, and kia ora koutou, everybody. Lovely to be here, and thanks for popping in this morning. So my job here is just to set the scene, really. The specialists are going to be talking in a moment. I'll hand over to Su-Fern, and she'll hand over to Brad, and we'll look at some of the detail. But what I'm looking to do is provide you with a kind of a context into which we're all building, into which we're all operating now. And some of that's a wider context than just building, but I'm going to start with kind of the what's important about property. So if we look at the property footprint, in New Zealand, it's 15% of all long-lived greenhouse gases. So that's all of our carbon and nitrous oxide gases. 15% of them are coming out of the building and construction industry. And if you look at the graph on the right, you'll see that just under half of those are our operating emissions. So that's your energy use within buildings. And then there's another just under a third, which is around what we're using, largely fossil fuels for heating our buildings. And then you'll hear more in a moment from Brad around embodied emissions at the top there, but that sort of third of our 15% of our emissions, so 5% of the country's emissions are in embodied emissions within those buildings, which Brad will talk more about in a moment. So construction and property matters as a component of New Zealand's overall footprint. It matters for lots of other reasons as well. People live in these buildings, people work in these buildings. We want them to be great buildings. But as we transition our economy towards net zero carbon economy by 2050, the construction and property sector is going to have to play a major part in that. And to some degree, it already is. We've seen a lot of movement over the recent times, and again, Brad will talk a bit more about that in a moment. So just to dive down a little bit more into those figures. So the residential sector is using about 1/3 of New Zealand's electricity. So lots of opportunity to reduce those nationally. But then if we look at our commercial building sector, so 23% of that electricity is used by commercial offices, and of those, the large end of town, the 1,000 square metre and above, is using 76% of that 23% of our energy use. So that big end of town, those larger commercial office buildings in particular, are a real opportunity for New Zealand. And one of the reasons is because if we look at this data at the bottom of the slide, the energy use average has been dropping in New Zealand slowly from 230 in 2016 to 214 kilowatts per metre squared now. But if those buildings were all Green Star 5, then that number would be about half of what it is currently. So there's a huge opportunity to improve our energy efficiency of our buildings. And that's not just about saving energy and reducing carbon, but it's also about saving money for property owners and for tenants, and also making for a much better living and working environment for people within those buildings. And so this is what's happened in New Zealand over the last number of years. So basically, the regulatory environment that we're all building into now has changed a lot. The Zero Carbon Act will be familiar to lots of you. That was passed in 2019. That was unanimous across the House. That set our net zero by 2050 targets. It also set methane targets of a reduction of 10% by 2030. And we also have an additional 50% reduction by 2030 of CO2 emissions, which we agreed to at the last conference of the parties, which is the COP that everyone refers to, which is all attached to the Paris Accord. So the Zero Carbon Act is key. It's legislated for our targets. It also established the Climate Change Commission, which you will have heard lots about. You want to think of them as our carbon auditor. They sit to the side, they look at the government's regulations, its policy, its actions, and where it's spending its money. And it's going to be telling every government from now on, how are we tracking towards those targets? Are your policies going to get us there? It's independent of any party, it reports to Parliament, but they're there as our auditors giving advice and direction, saying whether or not we're on track. The emissions trading scheme, again, familiar to lots of people, to all of us, because it's been around for a decade. But it's key because it's our major instrument for inserting pricing of carbon into pretty much everything we buy now. And that's going to be even more so from 2025 when there'll be a price of carbon on agriculture. The emissions reduction plan in the middle there is really key because that's a large number of policies and money, which is incentivizing behaviour change across business in particular, but also it's the funding and the support and the policies that are driving things like our EV subsidies and our agricultural research into alternatives or options for reducing methane and so forth. He waka kanoa, I won't talk about in depth at this in this meeting because it's a whole conference or a whole conversation of its own, but that's the agricultural sector process with government to find a way to fairly and equitably price emissions on farm. And then the adaptation planning will be really important to the property sector, but again, it's a big beast of its own, but it's really about climate change is here now. And we need to start to build to take into account what we know is going to happen around sea level rise, around the ferocity of our storms, and so on and so forth going forward. So there's been a lot of action in that regulatory space over the last wee while. We will also talk, Brad will talk a little bit about the embodied emissions side because MB are proposing some regulations in that space which will matter to all builders in the near future as well. But what's driving this, rather than just being about regulation and government, is actually consumers who are driving these changes. So over many years, Kantar has surveyed New Zealanders' environmental attitudes. And as you can see from this graph around the question of their personal commitment to sustainability, it's been tracking up for a very long time. And so currently, if you're in Auckland, 48% of your customers want to live a sustainable lifestyle. Now, that doesn't mean that they always make sustainable choices, that they would never go on a larger, high emissions vehicle, but it means that given an option, if they're looking at something of the same quality and of a similar price, they will choose the sustainable option where it's available. And that will include housing, and that will include leasing of property and so forth. So there's a really clear trend now that customers are looking for sustainable options when they're purchasing. And they say it to our businesses as well. So they talk about 66% of people across multiple markets are telling us that brands need to be committed to making society better. 87% of people would like to be better informed about what companies are doing in this space. And glaringly, right in the middle there, 74% saying a warning that customers that place profits before people will lose their trust forever. It's rather dramatic, but this is an international survey, again led by Kantar. But similar things and similar conversations are happening across New Zealand. And one of the differences at this time, because I've been in this space for quite a while, is that we're seeing some real conversations happening with businesses now. People aren't just saying this to surveyors because they think it's the right thing to say. We're seeing it across a whole bunch of behaviours in purchasing. That's why our EVs are now nearly 4 out of every 10 new vehicles are EVs. Nearly 20% of New Zealanders are now vegetarian. There is change out there. One of the things the bank has done in response to this to support our businesses is that we've developed a green loan product that is a product that's priced at the price of the money that we get, so there's no margin and no risk component built into that. It's basically established with a criteria aligned with the green loan principles, which means it's fairly rigorously assessed. It means any business coming to us that wants to do something that's supportive of the environment or more widely, and I'll show you what those criteria are in a moment, then we need to ask a number of questions to ensure that the money is going to the purpose that we intend. But the loans are available for up to 3 million. They can also be refinancing, so we can look backwards 2 years. And if you've done some stuff in the past, say solar on your buildings within the last 24 months, we can look to refinance at the green loan rate. And that rate, just to give you a sense, it starts with a 4 at the moment, and there's pretty much no other business loans out there available which start with a 4 right now. So it is a significant discount to money you'd find elsewhere. As I mentioned, these green loan principles are key to this. We have to be sure that both for our customers' sake and for the bank's sake, that there's no sense of greenwashing here. So we need to be clear about the use of proceeds. We need to be really clear that the money is being spent on what you say it's being spent, and that it's being managed and reported appropriately as you'd expect. So where can you use this loan? Renewable energy is key. So at the moment it's solar on buildings is an option. Energy efficiency is also an option for our clients. So that can include a piece of kit, or it can include renovations of buildings for improvements such as LED or double glazing, or switching out of AC to a more efficient form. Obviously insulation in buildings, things like that are all available through our energy efficiency component or category. And then in the green building space, we will support new builds in the residential sector, which are reach up to Home Star 6, which is the New Zealand Green Building Council's criteria, and then in the commercial space up to Green Star 5. So if you're building beyond Green Star 5, which isn't actually a great stretch anymore, and it's not necessarily a high premium anymore either. Again, Brad from New Zealand Green Building Council will talk more about this. Then you can get access to this to these funds. In the sustainable land use space, we will support native forest planting and riparian planting and so forth. Most of that is on-farm behaviours. So that's what's happening in the business space. In the personal space, so if you're a personal customer with ANZ, or you would like to be, then you can get access to a slightly ridiculous 1% loan up to $80,000 for any of these categories that are in front of you now. So we've had a large number of clients come to us for this. It's a fixed price. So whereas the business loan will rise as the floating rate goes up. So I've lost control of my slides, but that's all right. I haven't lost control of my mouth. This is available for ANZ clients. If you have a mortgage with us, you can get access to this to do energy efficiency upgrades in your home. It's been known out there as the Tesla loan because it can get you a new EV and so on and so forth. Look, I'll leave it there because I need to hand over to Su-Fern. But look, if you're a customer already with ANZ, talk to your relationship manager. But my key message out of this component of the presentation is that there's a real groundswell and change out there amongst our customers. We are looking to provide products to support that, but as businesses, everybody's going to need to have a position and going to need to be able to respond to what their customers are doing. So yeah, think long and listen into the specialists now, who will talk a little bit more about what's going on out there in the property space. Thanks. Su-Fern, I'm handing over to you.
Thank you, Steve. Hi, everyone. So good to be here. Thanks for dialing in. I'm Su-Fern Tan. I head ESG for CBRE's Pacific region. I've got a background in design, construction, and building operations for both the investor and occupier sides. And I've basically been in sustainability for over 20 years, and I've really seen it change, and it's wonderful to see this change. So I'm going to do a little bit of a brief, sorry guys, okay. Just a little bit of a summary about ESG, the markets and megatrends and what's next. So on the rise, what we're seeing in commercial real estate is net zero commitments. Everybody is making these net zero commitments, and it's not just in real estate. You know, it's outside of real estate as well, but everybody wants to be fossil free. We're also seeing the rise of the importance of amenity and customer experience when it comes to our real estate. Buildings are not just functional spaces anymore, they're destinations. ESG reporting is also on the rise for climate and nature and financial disclosures. And this is the ever evolving governance space that we find ourselves in. Investor-focused ESG queries are also on the rise. In fact, they're quite exponential. Lots of investors are concerned about greenwashing, so the level of investor queries on real assets are starting to be a little bit more detailed. The three big megatrends that we're seeing in commercial real estate is climate, is circular economy, and health and well-being. In terms of what's next, what we expect to see is a rise in the importance of embodied carbon. So neighbours will be releasing an embodied carbon tool. GBCA, Green Building Council of Australia, and possibly New Zealand are also looking at embodied carbon into their tools. Nature is becoming an asset class, which is great, about time. About 50% of GDP actually depends on nature. So I'm glad people are starting to recognize that. Diverse workforces are also what everybody is trying to head towards. The people that we see at work should really reflect the people we see on the streets. So we're trying to match that up. Supply chain governance. This is a very big deal, and in the procurement space, we are trying to increase transparency on where our goods are coming from. And this all relates to things like modern slavery and supply chain impacts that with regards to supply diversity, as well as circular economy type supply chain. ESG governance landscape is also moving very fast. Many different frameworks are starting to incorporate ESG, and everybody's just basically trying to play catch up in this space, and it's still moving very fast. Okay. The next slide is just a little bit about the history of ESG. So in 2004, the United Nations launched a report called Who Cares Wins? And it basically links financial performance to business sense and great business performance. In 2006, the Principles for Responsible Investment, the PRI, still very famous, was launched at the New York Stock Exchange. Now, the ESG is a term that has been coined by the financial sector, and it's because money is talking very loudly. We're starting to see a rise in regulatory requirements around the world, a rise in ESG rated funds, linkage between good ESG performance and financial performance, And people are starting to realize that doing the right thing does pay long term. There is a growing importance of ESG in the fintech sector as well. So, and today many pension funds, which are our largest investors in real estate assets, will not touch funds with very little or no ESG performance. Thus, there's been a very big ESG boom. I think that social pressure caused by COVID has become a catalyst for high ESG performance. So we now see the rise of social professional positions such as diversity and inclusion roles. Environmental factors have followed suit. Everybody wants ESG. Companies and brands are seeing ESG or sustainability as a market differentiator, as a business development tool, and it's the foundation of much corporate data. ESG is very heavily data-led. So just looking at, the journey of ESG, we used to call it sustainability, and in the early days, it really was just about a neighbours rating, ABGR, we used to call it. Used to be about green buildings, and the game was mainly energy efficiency. Today, there is a changing landscape. We've got neighbours becoming a regulatory requirement, expanding into water, waste, indoor environment. And although it started in Australia, it is now in New Zealand and in the UK as well. Climate active certifications are also very popular. Green Star continues to evolve and provide the holistic green building rating. We've also seen a rise in WELL ratings, which has to do with health and well-being, much related to the pandemic, and health and wellness is now becoming an important topic. I think companies are starting to realize that people, being their greatest assets, should also be invested in too. Current landscape, continuing with that, we continue to see net zero, not just for assets being net zero, but even corporations being net zero, and even construction being net zero, with a rise in renewable diesel. Fund and investor-driven ESG performance is a very big thing, and the rise of GRESB. So for investors, at the moment, the only way that they can benchmark how green a fund is through the GRESB rating. SBTI, which is the science-based targets, has also seen a very big boom with, I think, over 3,000 companies now committed to net zero, or at least not committed, but have signed up for it. Reconciliation action plans, very important. Most companies or big corporations have one. This has to do with Indigenous engagement and how we forward the lives of Indigenous peoples of our nations. Modern slavery, also in Australia, I think a couple of years ago, this is mandatory now for all corporations to report on this. Impact investing is very big. We're starting to see that funds that are tagged as impact investments do no worse than standard investments. And I think in the future, we'll start to see the impact investment funds actually do better, because I guess when you do good, you should be rewarded. Sustainability linked loans and green loans and bonds are also on the rise, and ANZ have echoed that as well. Next slide is embodied carbon is on the rise. We have increasing governance frameworks, a moving space, carbon offsets. Everybody is wanting climate active certification, and therefore the carbon offset market is quite big. And then there's also the governance aspect of those carbon offsets markets that has to be addressed. Nature-based solutions are coming into play, being very popular. Some of our real estate clients have actually invested in nature as an asset as well, to manage their carbon risks as well as to sell the carbon Climate risk, supply chain risk, and resource scarcity is a very big deal, and we're going to see that have an important part to play in the future, and that will come in the form of increasing insurance premiums. Before I end, I guess I just wanted to talk about a little bit about the future of ESG. I think there will be a rise in impact funds. Climate tech is currently the fastest growing VC capital vertical, and that's going to probably overtake everything else. We're going to see a rise in insurance premiums on the finance side, and we're going to see definitely a rise in sustainability-linked loans and green bonds. On the governance side, what I think might change is definitely the governance frameworks. That all has to keep moving, and with the goal of eliminating greenwashing. In the social space, we're going to see more Indigenous-owned businesses be supported. I do think that industry will continue to lead, not government, and companies will start to see talent attraction and retention closely linked to their company's mission. A company's brand will be tied to its impact on society, and hopefully supply diversity will become mainstream. In the environmental space, unfortunately, I think global temperatures will continue to rise and keep breaking records. However, nature-based solutions will be given center stage. The rise of embodied carbon and the frameworks surrounding that will continue to play an important part, and there'll be more information and data out there. The majority of building stock will be fully electric, which will be great. The grid will be greener to support that. Climate-induced asset risk will increase. Buildings will become smarter and more grid interactive, and we'll start to see more batteries in buildings. I could talk forever about this, but I won't. Thank you for listening, and I'll hand it over to Brad. Thank you.
Kia ora. Thank you so much, Su-Fern. My name is Brad Crowley. I work for New Zealand Green Building Council. Su-Fern, at the end of your presentation, I was just nodding my head repeatedly because I agree with everything you just said. I think it's a really exciting time that we're in, and I keep telling people that are in school, please learn about life cycle assessments and embodied carbon and climate adaptation plans, because I think that's going to be an area of expertise that we're kind of limited in New Zealand, I'm guessing in Australia also. Thank you all for having me. Thank you, Steve, and thank you, Su-Fern. So I'll be talking to you about New Zealand Green Building Council and steps to achieve lower carbon healthier buildings. Okay, so we're the New Zealand Green Building Council. People know us mostly about our rating systems, which is in the bottom right, but we also advocate. We've been trying to push for the building code to change for some time. Thankfully, that is finally happening with the Building for Climate Change with IMBY. We work with government to try and encourage them to make buildings greener, as you'll see in a little bit. We provide a lot of training to the industry. We do a lot of training engineers and architects and what have you. We're trying to do better about training contractors and subcontractors and sparkies and what have you to know what green buildings are and how that's going to affect them and the industry. And then we collaborate. We have over 700 members. Almost everybody that's big in the building industry is a member with us. We also have Future Thinkers, which advocates and encourages students that just graduated to be involved with us in green buildings. And then we also have industry advisory boards and do consultation. So what are the drivers for change? Su-Fern and Steve talked about a lot of them, but definitely, of course, the big one is reducing your running costs, or operational costs. Green buildings are usually energy and water efficient, and of course, they do many other things. As Steve mentioned, we've got the Zero Carbon Act, and buildings account for 15% of our emissions. People are wanting healthier places for their staff and customers. Definitely seen studies showing the millennials will want to see that an organization is walking their talk and that they actually have green buildings. And I think that's going to be attracting younger people if you can actually show that you have those types of buildings. We're definitely seeing a huge uptick in green finance. And as Steve already mentioned, the only way you can verify this is by having a third-party certification such as Green Star or Homestar to be able to get these loans. There's a task force on climate-related financial disclosure, or TCFD. New Zealand is the first country in the world that has required it of their top 200 businesses in New Zealand, and that goes into force next year. That's going to be huge. The organizations are having to look at the risk, both physical risk, such as my building is in a floodplain, and that's just going to get worse in the future, and also the transition risk, i.e., I want to be net zero, but the cost of carbon is going to go up. It's just as some examples. So more and more organizations are having to look deeper and harder at what their risks are, and oftentimes that includes their buildings. So we're seeing more and more people come to us that hadn't come to us in the past because they're having to actually look at the risk of their buildings and how to alleviate that. There's legal responsibilities for directors, and we're preparing for coming regulatory change, such as the building for climate change. In the next few years, to get consented, a building is going to have to show that they've lowered their embodied carbon. And real quick, embodied carbon is the carbon related to the building materials and building that building. So they call it A5, so A1 through A5. So it's basically from when you mine the product to manufacture the product, to transport the product to the building site, and then building the building. That's upfront carbon. And then there's the ongoing carbon of actually maintenance of the building, releases of refrigerants and what have you, and then actually the deconstruction of the building. So that's the life cycle of the building and looking at all the carbon related to that. No surprise, because people are looking at embodied carbon more, we're seeing more and more people trying to refurbish existing buildings rather than just knocking down old buildings and putting up new ones. Because as you can imagine, there's a lot of really good, useful carbon that's just going to be wasted if you demolish otherwise decent buildings. So what we're seeing is a lot of people are actually taking these existing buildings and making them much more energy efficient and water efficient, what have you, which is fantastic. So this is a quote from Peter Mentz. We hear this over and over again, that basically it's not, the overhead is very low to do a green building, but all these benefits of lower operating costs, higher occupancy, improved worker productivity, improved occupant health, and what have you. So we're hearing it from Peter, who's an amazing advocate of Green Star. Basically, they've just baked doing Green Star into their business case. They don't even really think about it anymore. They're just going to do Green Star, and that everyone who works with them knows it's going to be Green Star. And that's what they do. And we're seeing that with many other businesses, such as these right here. So they've all of these have committed to using Green Star in their buildings here in New Zealand, which is fantastic. As you might know, Countdown has required all of their buildings going forward to be Green Star. Green Star is a holistic rating tool, as is Homestar, which is for residential. So it's not just looking at carbon, although that's very important and front and center with everyone, but it's also looking at indoor environmental quality, daylighting, ventilation rates, very important things these days after COVID. Looking at surface water, stormwater runoff, where are you building the building? What are you doing the waste from the building in the future? And what are you going to deal with the C&Ds, or construction and demolition waste, for the actual project? So it's a very holistic program. So we start usually from 4 to 6 stars. So 4 is best practice, 5 is New Zealand excellence, and 6 is world leadership. For existing buildings, we go all the way down to 1 star. So that's Green Star performance, because we realize a lot of the buildings we have here in New Zealand, unfortunately, are probably not operating that great. So it's a journey to take the existing buildings to get them better. So that's what Green Star performance does. This is the Masons Brothers building down in Wynyard Quarter. Fantastic building, really beautiful. They took an old warehouse building that really kind of reached the end of its life, and it basically preserved the bones of it. Once again, it's saving a lot of embodied carbon by doing that, and created this beautiful building. And they've done studies showing that basically, because it's such a well-made building and has such good indoor environmental quality, they've got 25% reduction in absenteeism, and an increase of productivity of 9%, and an increase of commuter cycling by 130%. So they've shown that basically they've increased the productivity of the people by up to 10%, which, if you think about a normal business, that's about 90% of a business's overhead is the salary for their people, for their employees. And if you can actually increase productivity, that's a huge return on investment for an organization. So everyone talks about the economic benefits of green buildings in the realm of the cost savings related to water and energy, but really you need to think about actually your people and how much better they're going to be in a green building. This is also showing the benefits of a green building, showing lower OPEX, 27% increase in value, 12% increase in asset value, 5% premium in rental value. I just saw a study done by CBRE in the US that says it's still 4% premium in America for having a LEED building, which is equivalent to Green Star. So it's all across the world. It's been shown that if you've got a green third-party rated building, you're going to get probably better premiums on the rent. among other things. So this is just showing the benefits of using third-party certification. As already mentioned, we have the TCFD. As Su-Fern mentioned, there's GRESB. The image on the right is showing many of the sustainable development goals, which many organizations are now looking to as they think about ESG and figuring out how they can make their business better. And so that image is showing how Green Star addresses many of those requirements in the UN Sustainable Development Goals. The New Zealand government is walking their talk. They're now saying that they're going to make all of their buildings 4-star neighbors certified on new leases over 2,000. So neighbors NZ is for offices here in New Zealand for the energy use of buildings. And as of April of this year, every new build done by the government has to be 5 Green Star. Over 25 million, and then next year anything over 9 million has to be 5 Green Stars. So that's fantastic that the government has done that. They're walking their talk. They're saying that we want to be, leading the industry, which is really what the greatest thing about this is. What we're seeing is a lot of green buildings are basically here in Auckland and Wellington and a few in Christchurch, but there's not that many out in the regions. By having the government doing this, we're actually seeing it spread throughout the regions. We now are seeing many projects happening in Tauranga, as an example. So this is not just a Auckland, Wellington, Christchurch centric thing now. We're seeing it all throughout the country with interest in Green Star and Homestar, because Kangara requires all their projects to be Homestar rated. So this is the listing of all the different tools that NZGBC has. As Green Star Design and As Built is for new buildings, excuse me. And then for existing buildings, we've got Green Star Performance for any type of building. And then in Neighbours NZ here in New Zealand, unfortunately, is only for office buildings. So Su-Fern mentioned that Neighbours is doing a lot of other things like shopping centers and what have you. Unfortunately, that's not come across the ditch yet, but we do have Neighbours NZ for office buildings, which is fantastic. And then for new homes, we've got Homestar, which is made here in New Zealand. And then we've got Home Fit for existing buildings. And then for precinct scale neighborhood projects, we've got Green Star Communities. And we're having some really interesting interest in this tool. We've got one project up near Kaikoui that hopefully will register. And they're doing a really exciting thing. We're creating a lot of jobs, but also looking at circular economy. So the waste from one building might be able to be used for the manufacturing in another building. So doing really creative, exciting stuff. And Green Star Communities is helping with that, which is fantastic. Real quick, Neighbours, as mentioned, is about rating energy efficiency of office buildings. So that's the process you basically measure. It's all about data, as Su-Fern mentioned. That's really, people want to see the data and the measurements, saying how we're getting better, not just saying, yeah, trust us, it's getting better, but actually showing black and white that there's change. And that's just a circular system for Neighbours. So basically, you're always trying to improve your performance going forward. We had a study done recently for a 5,000 square meter whole building rating with Neighbours. For 3 stars, energy was 220 kilowatt hours per year per square meter, with energy cost of 220,000. For 5-star, it basically halved it, both the energy usage and energy costs. So by looking at ways to make your building more energy efficient, you're going to, of course, save your energy costs for the building. And it's a way to actually show your renters and other people that, hey, this building is actually a green and environmentally energy efficient building. And then we have Homestar. So Homestar is created here in New Zealand. We had version 4, we're now transitioning to version 5. Each new house here in New Zealand usually creates about 5 tons of construction waste. Homestar reduces that down to 2 tons. The additional cost is really more about 1 to 2% over building code cost. That's similar to Green Star. Green Star is between 1 to 5% premium compared to a building code of average building, commercial building here in New Zealand. We've had a huge uptick in interest in both Homestar and Green Star. We just had 5,000 registrations for Homestar in the past 6 months. Partly to do with these amazing loans that ANZ is offering to people. We definitely get a lot of people calling us saying, hey, we want to get the Homestar rating. We have to tell people this is something you have to think about in the early design stage. You can't basically have to shovel on the ground and try and get a building to be Homestar. It's a bit too late. Same with Green Star. You got to really get this designed in the early stages. And that's true of embodied carbon, by the way. Our new tool that we've just brought into New Zealand, that will become the rule of the land as of next week. You've got to show your building is 10% less embodied carbon than an average building or the reference building. And we're finding out that you really, if you're going to do that, you really have got to be thinking about this very early in the design stage. You cannot wait till too late to be thinking about this. So it's educating the industry to say, hey, if you're looking at doing a green building, you've got to be thinking about embodied carbon really early on. These are all the organizations that have committed to using Homestar here in New Zealand. And there are many others. And also, as mentioned, Kangor has committed to all their homes have to be green, Homestar. This is just showing the amazing uptick in interest in New Zealand with both Homestar. You can see the registration numbers just keep going up like a hockey stick. And then same with Neighbors and same with Greenstar. Last year we had 62 registrations, which if you compare it per capita, we're about equal to what's happening in Australia with Greenstar over there. And this year we've already gotten 70 registrations and we're only 3 months into our fiscal year. So we're expecting to smash the goal this year and probably get up, maybe even up to 100 registrations for Greenstar. So it's really an exciting time here in the market, and we're hearing a lot of interest from everyone about this stuff. And definitely the market's getting more and more educated. We did a study a few years ago showing how much embodied carbon was associated with our emissions here in New Zealand. That has since caused a lot of uptick in interest and knowledge of embodied carbon. And I think in some ways, New Zealand might be ahead of the curve of the rest of the world because we're so lucky with our green grid that although it's good to be really good about being energy efficient, because we're going to be bringing more electric vehicles and other loads on the grid. So we need to look at that. But we're lucky that we can kind of look at other things such as embodied carbon, which other countries that have to struggle with their very dirty grid. So we're in a really lucky, exciting place. We just released an embodied carbon calculator for our Greenstar projects, and it's out for consultation, and we're hearing some great feedback. We've also done one for Homestar about a year ago. So projects can actually use these calculators and get the data and put it in there and try to figure out how they can lower their embodied carbon. So, and what can you do? So for existing buildings, as mentioned, for commercial, definitely try and encourage the building to have Neighbors NZ certificate in an office, or if it's not an office, look at Greenstar performance. And then for a new build, please try and have the building be Greenstar 4, 5, or 6. And same for homes, looking at Homestar. And then always please come to our website to check out for more information and education. Thank you so much.
Thank you so much for that. So what I'll do is just ask all our speakers to pop back on the screen and we'll run through questions. Probably for Alan, we've just been asked about our green floating loans and around what we're doing with those green loans that have just launched. Alan, can you answer that one for me?
Yeah, certainly. So that green loan product that Steve spoke about launched a few weeks ago in the property finance space. The main interest to date has been in people looking to put solar panels on the roofs of their commercial buildings. I think in time, as Brad was saying, there's quite a lead time on incorporating Homestar and Greenstar into your construction projects. So we'll expect more of that kind of interest over time, I think.
Great. Yeah, thank you, Alan. Cool. We've got another question. Therefore, for the purposes of financing net zero, should there be a higher weighting on E versus S or G? Su-Fern, do you want to carry on a bit there, or what's your?
Yeah, sure. Should there be a higher weighting on E? Yeah, well,
out of ESG, so higher on E.
The net zero dialogue is about the E, but so it depends on the loan, and if the loan is environmentally focused, then yes, sure. But if it does incorporate social aspects as well, then we do need to take that in consideration. I haven't actually heard of a loan that a socially linked loan. I haven't heard of one yet. They're all environmentally linked right now. But it would be good to see that, because I'm really glad to see that corporations and everybody else are starting to realize that people are important too.
So ANZ has begun to incorporate social components into its sustainable financing. So we've done some issuing of sustainable finance to companies such as residential care, where they're providing and developing dementia units specifically designed for people who have obviously have got dementia or memory issues. And so that is technically more a social kind of wellness component rather than environmental. And so it's beginning to be included, but I think for some of these measurements is quite hard, right? So measuring the social impact of things can be quite a lot harder than some of the environmental impacts, although that's not always easy either. So at ANZ, we've been producing kind of backgrounders and support for businesses around how to measure your footprint, and then how to set targets, science-based targets and other targets, and basically how to get on with it. We understand that there are barriers for businesses to get moving in this space. So one of those is definitely knowledge and understanding what to do first. So there's a couple of documents that you'll find on our website. The link is at the bottom there. And this recording will be available. So if you don't quite get it down in time, you can go and look at the recording and grab it from there. But yeah, so these documents are available, as well as quite a number of YouTube videos of other presentations that have been done over the last few months. And keep an eye on that site, I guess, because there will be more in the future. I want to ask a question actually for Brad and also for Su-Fern, because one of the comments I get a lot as I'm out and about is people, we're all aware of the supply chain issues that lots of businesses have had, right? Getting access to materials and staff. Is this an issue for green building at the moment? Can we get the architects and the builders who know how to do this stuff? Can we get the kit and the specialty equipment in particular that we need to be able to do these buildings well in New Zealand? And I'll ask the same of you, Su-Fern, as to how it's going in Oz.
Short answer is still happening. I mean, there is, of course, there was that little issue I had for a little bit with JIB, and there is still, my understanding, a little bit of issue with getting sustainably sourced timber. But I think that's a worldwide issue. It's not just a New Zealand specific issue, thankfully. Still not great, but but I do know that there's really, I think, opportunities for New Zealand to actually be making stuff here, like actually making CLT rather than have to import it from China or other places. And so I think there's really an opportunity here for New Zealand to see things that we could be making here with the great resources that we do have. So I think honestly, one of the bigger issues is actually having enough trained up engineers and architects in the realm of sustainable buildings. We have a fair amount, but now we've got a huge uptick of interest, and we're finding that we probably need to be doing better about training in-house. I mean, the answer is, oh, we'll just get people overseas, but that's not really a sustainable way of going forward, because those places overseas need those people there too. So I think we need to be a little bit better about training our people up. And that goes not just to the engineers and architects, but like I said, the Sparkies and the plumbers and everyone else. So.
All right, Sue?
Yep, totally agree with Brad. Everybody should have sustainability as one of, in their scope, right? No matter what you do, manage a building, or whatever, manage people. But with regards to the embodied carbon, Steve, you know, it all focuses around the data. And I don't think we're receiving a lot of data transparency on the supply chain at the moment, anywhere else. I think in the Americas, where I lived for 10 years recently, it is quite advanced, but still not there yet. And I think that one really good way to go forward, and they're picking this up in Australia as well, and possibly New Zealand, is through the Environmental Product Declaration, so the EPDs. So every product should fill in a template, which is an EPD, and then you should be able to get some environmental data. It's a bit tricky with the transport aspect, but it's a start. And then with technology advancing and using things like blockchain, we should be able to track supply chain issues pretty well in the future. But it is certainly a future thing. No one has it down pat at the moment.
No.
Great. Thank you.
Can I circle back to that real quick? So we're really lucky that we have brands here in New Zealand who's actually done a fantastic job of getting data together for embodied carbon and EPDs. So we're a little bit ahead of you across the ditch, as my understanding, Su-Fern, is that we got a little bit more data available to us. And we just released our embodied carbon calculator. You definitely get rewarded if you have an EPD, and you get basically not rewarded if you're just using the standard data. So we're trying to really encourage the supply chain here in New Zealand, and I'm sure also in Australia, to try and get EPDs, which, just so everyone knows, an environmental product declaration is basically just being transparent. It's not saying it's green or not, just saying this is all the data related to my product. And then you can dump that into a database and figure stuff out.
Thank you. Thank you, everyone. Thank you to Su-Fern, thank you to Steve Dixon, and thank you to Brad Crowley, and thank you to my colleague Stephen Contra in the background helping us with everything as well. Thank you to our wonderful audience for your participation and your great questions.